The headlines are terrifying. Rumors of war between global superpowers. The stock market is bleeding red. To build are sinking day by day. And to make matter worse, even gold, the ultimate safe haven, is also falling. The panic. Hello friends, welcome to Money Habits, and here is your war survival guide for your money. So let's get started. If you are salaried employee watching your hard-earned provident funds, or SIPs tip, or business owners watching inflation eat your margins, you are probably asking yourself one panic question: where on earth do I put my money right now? Should you panic, sell your stocks? Should you exit your mutual funds before they crash further? Or is this actually the greatest buying opportunity for your lifetime? In this video, we are not going to give you emotional guesses. We are going to look at hard data, analyze the history of previous wars and the pandemics, and give you a step-by-step survival blueprint for your money. So let's look at the facts, the paradox. Why is everything falling? Let's address the elephant in the room. Historically, when a war breaks out, stocks falls and gold shoots to the moon because people rush to safety. But in the current landscape, both are dropping. And why? To understand this, we have to look at the fuel of global economy: oil and liquidity. When tension rise in the Middle East, specifically around critical trade routes like Strait of Hormuz, oil prices skyrocket. High oil prices causes massive inflation. To fight that inflation, central banks like US Federal Reserve are forced to keep interest rate high. Here is the secret of financial world: where interest rates are high and the future is uncertain, big institutional investors scream for one thing: liquid cash, specifically the US dollar. They start selling everything to get cash. They sell stock, they sell mutual funds, and yes, even liquidate their gold, cover their losses, and park their money in high-yielding government bonds. This creates a temporary free fall where nothing seems safe. But as financial middle-class investor, reacting to this short-term panic is the exact moment you destroy your financial future. So let's look at what history actually teaches us. Lesson from the history, wars and pandemics. Look at the track of record of global crisis. So case 1, World War II. When Hitler invaded Poland in 1939, global stock market tangled. Fear was at an all-time high. But do you know when the US stock market hit its absolute bottom? May 1942, right in the middle of the war, when the news was constantly terrible. From the dark bottom, the markets began one of the greatest bull runs in the history. Second case, the Gulf War, 1990 to 1991, when Iraq invaded Kuwait, gold spiked rapidly from $384 to $400, and our stock fails. But as soon as the conflict gets stabilized, gold prices leveled out and the stock bounces right back. Case 3, 2020 COVID pandemic. Remember March 2020, the world stopped. Businesses closed, stock market get crashed by around 30%. In the matter of weeks, people were liquidating everything, including gold, in a mad dash of cash. Sounds familiar, right? But what happened next? Those who didn't panic and stayed invested witnessed the fastest and most aggressive recovery in the stock market history by late 2020, 2021. And this shows the pattern is always the same. The sharp phase, everything falls due to panic and need for immediate cash. Second phase, the adjacent phase. Market realize the world isn't ending and the smart money starts buying cheap assets. And third one is recovery phase. Market hit new all-time high. If you sell during the phase 1, you absorb the losses and miss the massive gain of the phase 3. Should you exit your investment? Let's answer your burning question directly. The answer: if you are long-term investor planning for retirement, your child's education, or building a wealth over 5 to 10 years, then absolutely not. Exiting now can turn your paper losses into real losses. If you are a salaried employee or doing monthly systematic investment plans, a falling market is actually your best friend. And why? Because of an economic principle called cost averaging. When prices fall, your fixed monthly investment buys a more number of units of the fund. When market recovers those extra cheap units makes you incredibly wealthy. But there is an exception. If you need this money in next 6 to 12 months for an emergency or for a business expense, you should not have it in the stock market anyway. So second, should I sell my gold? The answer is no. Gold is falling right now because of the institutional setting and the strong dollar. But gold has zero counterparty risk. It cannot be banked in every major prolonged crisis in human history. View physical gold or digital gold sovereign bond as your portfolio's insurance policy. Then what is the safest option right now? So if you are a middle class earner or a business owner looking to protect and grow your capital right now, what are the safest options? And here is the ultimate defensive investing blueprint divided into 4 asset classes. First, emergency cash. Keep 6 to 12 months of expenses in emergency saving account or in FD because liquidity is a king in crisis. Second, government bonds. Safe and guaranteed returns when markets are volatile. Government-backed securities are peace of mind. Third one is defensive stock. Look at the sector which must use regardless of war. Example, FMCG or pharmaceutical sectors or sectors like power and energy. And the fourth one is the diversified mutual fund. Do not stop your SIPs. Let them run to capture the bottom of the market. Right now, the world is fearful. This is not the right time to run away. This is the time to stand firm. Call to action. Wars are of course tragic and the human cost is always the most important stage. But as someone responsible for your family's financial future, you cannot panic dictate your strategy. History shows us that the global economy is incredibly resilient. Those who stay calm and diversify and keep their investment for long term always come on top. Are you planning to stop your SIP or are you looking at this as an opportunity to invest more? Let us know in the comment below. And if you found this breakdown helpful, do me a quick favor, hit that like button and please subscribe. Until next time, stay calm, stay invested, take care and goodbye.